Stop scrolling right now, because what I'm about to tell you will either offend you or change the way you trade forever. The market is not your enemy. Your strategy is not your problem. You are. And until you face that truth, you will keep losing again and again. Most traders walk into the market with the wrong mission. They think their job is to outsmart the market, predict every move, and find the perfect entry that guarantees profit. But the truth, one that traders like Tom Hougaard emphasize, is far more uncomfortable. The market is not something you can control, predict, or dominate. It is bigger than you, faster than you, and completely indifferent to what you want. The moment you accept that truth is the moment your real journey begins. Because if you cannot control the market, then what can you control? Only one thing: yourself. This is where most traders fail. Not because they don't understand charts or indicators, but because they don't understand their own emotions. Fear, greed, impatience, and ego quietly take over their decisions. A trade goes slightly against them, and fear tells them to close it early. A trade goes in their favor, and greed tells them to risk more than they should. They hesitate when they should act, and they act when they should wait. Over time, these small emotional mistakes compound into consistent losses. A winning trader operates differently. They don't waste energy trying to predict every price movement. Instead, they focus on staying calm and disciplined regardless of what the market does. When others panic, they remain steady. When others chase opportunities, they wait patiently. This level of control doesn't come naturally. It is trained, practiced, and built over time. Think about it like this: the market is a storm. You cannot stop the wind, you cannot calm the waves, and you cannot control the direction of the storm, but you can control how you sail your ship. You can decide when to move, when to hold back, and how much risk you are willing to take. If your emotions take over, you crash. If your discipline stays intact, you survive and eventually thrive. Emotional control in trading is not about suppressing feelings, it's about understanding them without letting them dictate your actions. You will feel fear when money is on the line. You will feel excitement when you see profit. You will feel frustration after a loss. These emotions are normal. The difference is that a winning trader does not react impulsively to them. They follow their plan no matter what they feel. This is why discipline is more powerful than any strategy. A simple strategy executed with consistency will outperform a complex strategy driven by emotion. The market rewards behavior, not intelligence. It rewards those who can stick to their rules when it's hardest to do so. And here's the hardest part: taking responsibility. It's easy to blame the market, the news, or bad luck, but every time you do that, you avoid the real issue. Your results come from your decisions. If you enter too early, held too long, or risked too much, that's not the market's fault. That's something you have the power to change. When you shift your focus from controlling the market to controlling yourself, everything changes. You stop chasing trades, you stop reacting emotionally, you start executing with clarity and confidence, and slowly your results begin to reflect that discipline. In the end, winning in trading is not about being right all the time. It's about being consistent in how you think, act, and respond under pressure. The market will always be unpredictable, but if you can master your own mind, you create something powerful, an edge that no indicator or system can ever give you. One of the hardest truths to accept in trading is that being right doesn't make you money. Managing your trades does. This is where most traders struggle because their natural instincts work against them. When a trade starts losing, they hesitate, they hope, they convince themselves the market will turn around. And when a trade is winning, they panic. They rush to secure profits before the market takes it back. These reactions feel natural, but they are exactly what keeps traders stuck in a cycle of inconsistency. The principle that traders like Tom Hougaard stress is simple, yet incredibly difficult to follow. Cut your losses fast and let your winners run. It sounds easy, but in reality, it goes against human psychology at every level. When you take a loss, it feels personal. It feels like failure. Your ego gets involved, and instead of exiting quickly, you start negotiating with the market. Maybe it will come back, I'll just give it a little more room. But that little more room often turns into a much bigger loss. Small losses are part of the game, but big losses are what destroy accounts. A winning trader understands that losses are not something to avoid, they are something to manage. They accept them quickly, without hesitation, because they know that protecting their capital is more important than being right. On the other side, when a trade is going in your favor, a different emotion takes over: fear. Not fear of losing money, but fear of losing the profit you already have. So you close the trade early, you take a small win, feel relieved, and move on. But over time, this habit limits your growth. Your losses remain larger than your wins, and even if you're right most of the time, you still struggle to make consistent profit. This is why letting winners run is so powerful. A single strong winning trade can cover multiple small losses. It creates an imbalance in your favor. But to achieve this, you must learn to sit with discomfort. You must watch profits fluctuate without reacting emotionally. You must trust your plan even when your instincts tell you to exit. A winning trader doesn't aim to win every trade. Instead, they focus on the bigger picture. They understand that trading is a game of probabilities, not certainties. Some trades will lose, that's unavoidable. But if losses are kept small and wins are allowed to grow, the math eventually works in their favor. This approach requires a complete shift in mindset. You stop thinking about individual trades as wins or losses and start seeing them as part of a long-term process. Each trade is just one step in a larger journey. The goal is not to avoid losing, it's to ensure that when you lose small, and when you win big. Discipline plays a critical role here. You need clear rules for when to exit a losing trade and the strength to follow them without hesitation. You also need the patience to stay in a winning trade even when it feels uncomfortable. This balance is what separates professionals from beginners. It's not easy. In fact, it's one of the most difficult skills to master in trading. But once you do, everything changes. You stop fearing losses because you know they are controlled. You stop rushing profits because you understand their potential. And over time, your results begin to reflect that shift. In the end, success in trading is not about how often you win, it's about how much you win when you're right and how little you lose when you're wrong. When you truly understand and apply this principle, you move from reacting emotionally to operating with precision. And that's when you start thinking and trading like a professional. Most traders spend countless hours searching for the perfect strategy. They jump from one indicator to another, from one system to the next, believing that somewhere out there is a method that will eliminate losses and guarantee success. But the uncomfortable truth, something repeatedly emphasized by traders like Tom Hougaard, is that strategy is rarely the real problem. The real problem is execution. A strategy, no matter how good it is only as powerful as the person using it. You can have a system with a proven edge, clear rules, and strong logic behind it, but if you fail to follow it consistently, it becomes useless. This is where discipline becomes more important than strategy. Because in trading, it's not what you know that matters most, it's what you consistently do. Think about how most traders behave. They start with a plan, but the moment the market opens and emotions kick in, the plan begins to fade. They see a setup that almost matches their rules, and they take it anyway. They exit trades early because they feel uncertain. They move stop losses because they don't want to accept a loss. Each of these decisions may seem small in the moment, but over time, they completely destroy the effectiveness of any strategy. Discipline is what keeps you anchored when emotions try to pull you away. It's the ability to follow your rules even when it feels uncomfortable, even when doubt creeps in, even when the outcome is uncertain. And that's the key. Trading is always uncertain. There is no setup that guarantees success. Every trade carries risk. So if you rely on confidence or certainty to execute your strategy, you will always struggle. A disciplined trader understands that they don't need to feel confident to act. They just need to follow their process. They trust their system not because it wins every time, but because they know it works over a series of trades. This shift in thinking is powerful. Instead of reacting to each individual trade, they focus on consistency over time. This is why a simple strategy executed with discipline will often outperform a complex one executed emotionally. Complexity creates more room for hesitation and second guessing. Simplicity combined with strict rules makes execution clearer and more consistent. But even the simplest plan requires mental strength to follow. One of the biggest challenges is dealing with losing streaks. Even the best strategies experience periods of drawdown. During these times, undisciplined traders begin to doubt their system. They start making changes, skipping trades, or overtrading to recover losses. In doing so, they break the very structure that could have led them back to profitability. A disciplined trader does the opposite. They stick to their plan, knowing that losses are part of the process. They don't let short-term results dictate long-term decisions. This ability to stay consistent, even during difficult periods, is what gives them an edge. Another important aspect of discipline is patience. Not every moment in the market is an opportunity. Sometimes the best decision is to do nothing. But for many traders, inactivity feels uncomfortable. They feel the need to be in a trade, to be doing something. This leads to impulsive decisions and unnecessary losses. Discipline means waiting for the right setup and having the strength to ignore everything else. In the end, trading success is not built on moments of brilliance, but on habits of consistency. It's about showing up every day and executing your plan with precision, regardless of how you feel. Emotions will always be there, but discipline ensures they don't control your actions. When you truly understand this, your focus shifts. You stop chasing the perfect strategy and start refining your behavior. You realize that the edge you're looking for isn't in the market, it's in your ability to follow your rules without compromise. And that's what separates a trader who struggles from one who succeeds, not the strategy they use, but the discipline with which they use it. Most people enter trading believing that success will come from finding comfort in their strategy, comfort in their decisions, comfort in their results, but the reality is the exact opposite. Growth in trading, as traders like Tom Hougaard emphasize, only happens when you learn to operate in discomfort. Not occasional discomfort, but consistent, unavoidable psychological pressure that challenges your instincts at every step. The reason is simple: your natural reactions are not designed for trading, they are designed for survival. In everyday life, avoiding loss, seeking certainty, and reacting quickly to danger are helpful traits, but in the market, those same instincts work against you. They push you to close winning trades too early, hold on to losing trades too long, and act impulsively when patience is required. To grow as a trader, you must go against these instincts, and that feels uncomfortable, deeply uncomfortable. For example, imagine you're in a profitable trade. The market is moving in your favor, and you see your profit increasing. At first it feels good, but then the fear starts creeping in. What if it reverses? What if I lose this profit? That fear creates pressure. And the easiest way to relieve that pressure is to close the trade. Instantly you feel safe again. But by doing that, you've limited your potential. You've chosen comfort over growth. Now consider the opposite situation. You're in a losing trade. The price moves against you, and instead of accepting the loss, you hesitate. You don't want to feel the pain of being wrong, so you hold on, hoping it will turn around. That hope gives you temporary emotional relief, but it increases your risk. Again, you've chosen comfort, but at a much higher cost. A winning trader learns to reverse this pattern. They train themselves to accept discomfort as a necessary part of success. They close losing trades quickly, even though it feels painful. They stay in winning trades longer, even though it feels risky. They follow their plan even when every emotion is telling them to do something else. This ability doesn't come overnight. It requires conscious effort and repeated exposure to uncomfortable situations. Each time you act against your emotions, you strengthen your mental resilience. You begin to rewire your responses. What once felt unbearable starts to feel manageable, and eventually it becomes part of your normal behavior. Discomfort also shows up in patience. There are long periods in the market where nothing meets your criteria. No clear setups, no strong opportunities, just noise. During these times, boredom sets in. And boredom is dangerous because it pushes you to act without reason. You start looking for trades that aren't really there just to feel engaged. But discipline means sitting through that boredom. It means doing nothing when nothing needs to be done. That kind of patience is uncomfortable, but it protects you from unnecessary losses. Another form of discomfort comes from uncertainty. No matter how good your strategy is, you never know the outcome of the next trade. There's always risk. There's always doubt. Most people try to avoid this feeling by seeking more confirmation, more analysis, more certainty. But certainty in trading is an illusion. A winning trader accepts uncertainty. They don't need to know what will happen next, they just need to execute their plan with consistency. This acceptance removes the emotional burden of needing to be right and allows them to focus on process over outcome. In the end, growth in trading is not about finding ease, it's about building strength. It's about becoming the kind of person who can act with clarity even when emotions are intense. The more you embrace discomfort, the more control you gain over your decisions. And that's where the real transformation happens. When you stop running from discomfort and start using it as a tool, you begin to evolve not just as a trader, but as a person who can operate effectively under pressure. Because in trading, comfort is the enemy of growth. And discomfort, when embraced correctly, becomes your greatest advantage. One of the most defining traits of a successful trader is not intelligence, not experience, and not even strategy. It is the ability to take full responsibility. This idea, often emphasized by traders like Tom Hougaard, is simple to understand but extremely difficult to practice. Because taking responsibility means removing every excuse, every external blame, and every justification that protects your ego. Most traders fall into the habit of blaming something outside themselves. They blame the market for being manipulated. They blame the news for unexpected moves. They blame brokers, volatility, or bad luck. And while these factors can influence the market, using them as excuses prevents growth. The moment you blame something external, you shift control away from yourself. You turn trading into something that happens to you rather than something you actively manage. A winning trader thinks differently. They understand that while they cannot control the market, they are fully responsible for their actions within it. Every trade they enter, every risk they take, every decision they make, those are within their control, and that's where their focus stays. If a trade ends in a loss, they don't immediately look for something to blame. Instead, they ask themselves honest questions. Did I follow my plan? Did I manage risk properly? Did I act out of emotion or discipline? This level of self-reflection is uncomfortable because it forces you to confront your mistakes without hiding behind excuses. But it is also where real improvement begins. Taking responsibility means accepting that your results are a direct reflection of your behavior. If you overtrade, your account will suffer. If you ignore your stop losses, losses will grow. If you let fear control your exits, profits will shrink. These outcomes are not random. They are consequences of your decisions. And once you accept that, you gain the power to change them. This mindset also builds consistency. When you stop blaming external factors, your focus becomes internal and controllable. You begin to refine your process, improve your discipline, and develop habits that support long-term success. Instead of reacting to the market, you start responding with intention and clarity. Another important aspect of responsibility is emotional ownership. Trading is a psychological game, and your emotions play a major role in your performance. It's easy to say, the market made me panic, or that move forced me to close early. But in reality, the market doesn't control your emotions, you do. The market simply creates situations, and your response to those situations determines the outcome. When you take responsibility for your emotions, you stop being a victim of them. You recognize fear, greed, and frustration as internal signals, not external forces. This awareness allows you to manage them more effectively. You don't eliminate emotions, you learn to act independently of them. Responsibility also requires honesty. Not the kind of honesty you show others, but the kind you show yourself. It means admitting when you broke your rules. It means acknowledging when you acted impulsively. It means facing the truth even when it's uncomfortable. Without this honesty, progress is impossible. Many traders avoid this level of accountability because it feels harsh. It removes the comfort of excuses and exposes weaknesses. But that discomfort is necessary because every weakness you identify is an opportunity to improve. Every mistake you own is a lesson you can learn from. Over time, this mindset creates a powerful shift. You stop seeing losses as failures and start seeing them as feedback. You stop feeling helpless and start feeling in control. You realize that while you cannot control the market's direction, you can control how you prepare, how you execute, and how you respond. In the end, taking full responsibility is what separates amateurs from professionals. It transforms trading from a game of chance into a process of continuous improvement. It builds confidence, not the kind that comes from winning, but the kind that comes from knowing you are in control of your actions. And once you reach that point, everything changes because success in trading is no longer something you hope for. It becomes something you build, decision by decision, with complete ownership of every step along the way.